post that we have a Q&A sessions, and I request all the participants, if in case you have any questions, you can switch on the cameras and take up your questions. So both the speakers can provide the answers. So now I hand over the mic to Mihirji.
Sure. Thank you, Nupur. Thank you, India Juris, and thank you, Samiji, for giving this platform an opportunity to create more awareness about GIFT IFSC and also IFSCA to this extent. So thank you very much for this. And since we have limited time in hand, what I'll do is I'll make certain introduction about IFSCA, more appropriate about GIFT City, because that is where people should be aware. I guess, though I come with the regulatory side, but bulk of my work would be done by you. So maybe post this particular introduction of GIFT City, I'll take a backseat. Maybe you can take on the regulatory side of it as to how the structuring and those things are done, because you guys are expert in that. And maybe we can have chip in during the Q&A sessions. So,
Mirji, probably you can throw some light. What are the benefits to the global funds? Because who are trying to relocate, if you can touch up in your thing, the funds who are trying to relocate, what are the benefits? We'll have a discussion in question Q&A as well.
Right,
so,
right.
Please.
Sure. So there is a short presentation on the GIFT City side of it. I'm just putting that on the screen.
Yes, please.
So is it visible? I hope the presentation is visible to all. So the GIFT City is a land parcel, what I would call it, as a free zone, which is there between Ahmedabad and Gandhinagar. In July last year, 2022, we had Honorable Prime Minister coming here for the launch of an event, which was a bullion exchange, as well as the Nifty IFSC or SGX Connect, as we call it, which is the Nifty, which is being traded in Singapore, which June 3rd July is going to start getting traded in GIFT IFSC. So this was a launch event for that, and that is when Honorable Prime Minister was here, and he had certain things which he gave a message during that time, that GIFT City is an important gateway to connect India with global opportunities. When we integrate GIFT City, we integrate with the whole world. So idea as to how GIFT City can be acted as a launchpad, both for inbound and outbound investment opportunities for all which are there. As we move ahead, so this is a broad idea which I would like audience to have as to GIFT City lies in between Ahmedabad, which is a classical heritage city, and the capital for Gujarat, which is Gandhinagar, and GIFT City is somewhere in between. And it's very close to the airport. It's 20 minutes from the airport. Good 4-lane road is available for travel and all. Why GIFT City? It's a green city, I would put it that way, or a greenfield project where you have very smart infrastructure which is coming up. So apart from having the regulatory side which is being developed by IFSC, all the regulations and all for enabling the businesses over here, it's also very important the kind of infrastructure which is being provided, and that is where we see how the residential zone is coming up, how the GIFT City, which is the nodal authority for providing infra over here, they are coming out with the social space, with the commercial space, and developing the entire zone. So in totality, it becomes a zone where people work, people can stay, have a good quality life, and how it is. So it is in the development phase. That is where it is. As I said, infra is really world-class. Nothing on top, everything is underground when it comes to the district cooling system. The water gets pumped, the air conditions are chilled out, so you don't have any outdoor units visibly, which people would see in other places in India. That is where it is. The garbage collections is very much automated. You have good power infra, which is the GIFT City company itself. So is a water treatment plant where from a tap water itself, you can drink the water. That's the quality of things which are being provided over here. If I have to give you a sense of an idea, as I said, it is between Gandhinagar and Ahmedabad. So overall, 886 acres of land parcel is what we can see over here, which is there in the plan. Out of which 261, the red dotted zone, is the GIFT SEZ area where the financial services are being done and where the regulator is IFSCA. That's an exclusive zone where dollar-denominated currencies or that is applicable, and where IFSCA as an authority is there, be it for banking, for financial services, capital market, insurance, and even pension is all involved. There's a super regulator which looks after this entire area, right from making regulations, registration to supervision side of it. Also looking at the kind of development which is happening over here, apart from financial services, the foreign universities are looking at setting up their campuses over here. We are working towards international arbitration and all those things. So the government has taken a call to expand this region. And so another 2,300 acres of land is where the expansion would happen, which is currently in the neighboring zone of GIFT City. That is how the city is being planned, as we can see. So as I rightly said, today GIFT City is divided in two zones. The red ones, which we saw in the earlier one, is the SEZ zone, where the IFSCA is hosted. The first international financial city is there. And the other is a domestic tariff zone, where you have the other soft infra as well as the normal domestic entities being operating over here. So international finance, there are key silent features which I already highlighted. We have a dedicated financial services centers authority, a regulator, which is looking at the entire thing under one umbrella. So be it banking, be it capital market, is one single regulator. So it gives a holistic view to the regulator as well as to the participants in terms of how things can be done in IFSC. It's a fully convertible zone, as I said. Apart from INR, all other currencies can be worked on over here. Is operated primarily the currency of where the dealing happens is USD. There are a lot of tax incentives provided by both the central government and the state government. Its full-fledged ecosystem is now developed. So you have the other ancillary services, be it a law firm, be it the accounting guys, the consulting guys, the trusteeships, all those people are already there, which makes the overall the financial services work. They're already there. The regulations which we have developed in past 2 years, they have been done in such a manner that we have tried to benchmark it with other developed jurisdictions, so that people who are coming from the international side, they are familiar with those kind of things. They are already aware, and here they see something which is on the similar lines, or maybe a better. That is what has been done in the regulations which have been framed. And at the last, when I said last year, Honorable Prime Minister Modi was over here for the inauguration. So you can see the kind of involvement is there. So it is a good amount of sovereign backing which is there, which works as a unit in supporting the International Finance Center, which is there in GIFT. So this is how it all started. So I won't take much of a time, but yes, we have come a long way from where we started. And last 2 years have been pretty exciting for us. Once the IFSCA authority was, which came into existence, and post which we came out with a lot of regulations which have enabled the entire ecosystem, be it banks, be it capital markets or insurance, which is being worked on at this point of time. Have taken shape. The last but not the least, even there's some work which is already begun in the pension sector as well. So which you will see eventually coming out, taking shape in next couple of months. I'll skip this particular slide. Is the same thing which is there. But yes, as I said, domestically, you have 4 different regulators which are looking at 4 different sectors, namely banking, capital markets, insurance, and pensions. Over here, you have a single regulator, which has assumed the authority, or which is looking at all the 4 verticals in the financial sectors. So overview, what are the business which are being done? So we have banks. They are in the form of branch at this point of time. So you have Indian banks and all the foreign banks operating in GIFT IFSC. There are capital markets. So we have 2 stock exchange which are enabled or which are currently operating over here, and also 1 bullion exchange which has been operating. Similarly, we have clearing houses. The asset management industry, along with the banks, have taken up. So we have the fund management entity, the funds, the wealth managers, and the portfolio managers, along with the custodians, and all already operating over here. Similarly, insurance companies are very much there. As I said, other financial services like finance company, global in-house centers, international trade platform entities, the fintech entities, IFSC is coming out, being one of the fintech hub that is coming up, and other emerging areas like GICs, the in-house centers. Bank of America is already operating over here with strength of 2,300 employees. The aircraft leasing companies have come set up shop. There are 15 to 20 aircraft leasing companies today which are operating here. Ship leasing companies have started operating, so on and so forth. So that is an holistic opportunity, or I would say, is there in all the sectors which are being currently handled in IFSC. So these are the set of regulations which are there. I guess more or less all the regulations which are required for the center to function, right from the banking to the intermediaries and all, are very much up. And then these are benchmark regulations. The way we go about doing these regulations, we benchmark it with the global side. We make the public consultations, we take the public opinion, then it goes to the board and gets finally notified. So that is how these regulations have come out. These are the few highlights, the kind of business transactions which have been happening in past 2 years. And as you can see, the growth has been substantial over a 2-year period, right from 129 entities to 485 entities. It keeps, the list is just growing day by day. So that's phenomenal thing which is happening over here. As I mentioned, so I'm just giving a brief overview as to kind of what is a tax regime. So you have 100% tax holidays from business income. So the idea is to have 10 years out of 15 years, you can claim this tax holidays. You have minimum alternative tax at 9%, no STT, GST, stamp duty, if at all things are being traded on the exchanges. Withholding tax is 4% on interest paid on debt instrument. Competitive regime for the tax. So you see a DTA between Singapore or Mauritius. The similar kind of tax treatment is hard-coded in the regulations which are over here, or the tax side of it. And there are certain incentives which is given by the Gujarat government of some ITS policies, which are being set up in GIFT City, which is more relevant for GIC kind of a setup, global in-house centers. They can make use of that. So, Samirji, I won't be going much deeper into the each and every part of it, but as you said, for the banking, for the funds which we are looking at. So, as I say, normal banks are already, normal funds are already setting up their shops. So, be a private equity, venture capital, or a long only or hedge funds are coming and setting up their shop over here, which are new funds. And they are either pulling money here and then deploying in India, or they are going global. Along with that, what has happened is that we have seen there are a lot of interest which is coming for global funds. And these are 2 types of funds. One, funds which are already operating in other jurisdictions and investing in India. Those kind of funds where we have seen the relocations already started to happen. The first fund which has made this one news is the Alchemy one, where they have shifted their portfolio from Mauritius to India. The further funds are also being coming. There are other funds which would be, you will be having a PR released by other funds in another 1 or 2 weeks. So good amount of things are happening. And the reason what we have asked for this is, one, in terms of parity which comes with the regulation. So that is where they got a sign off from their investors. Yes, they are comfortable. Second, an investment manager gets a complete hold of the structure which is there. You are operating in the same time zone, and you are very much close to your place of operation. So this gives them a lot of things. I'm sure, though we have not done a study, but they would definitely have done the study in terms of their costing as well, as to what goes into having people on the ground. Also, the other regulatory costs which are associated, or the compliance cost and the place of operations as to how it is being done. So those are the things which are motivating factors for this kind of funds today, which are already operationalized through an FPI route investing in India to come and set up their base. We are also seeing a lot of inquiries from foreign funds who are looking at India and maybe also want to see if they can create IFSC as a base, and they can then see from IFSC if they can see or control the larger Southeast Asia side of it. So any which was, that was one of our medium-term agenda as to how we attract those kind of funds. But largely we are seeing those kind of interests being generated, and a lot of inquiries are coming. As I said, at least for the India piece of it, we already seen one migration which has happened. Earlier, the government had given certain tax exemptions till 2023. We represented to the government, so did the industry as well, because they were actively considering to do that. So now that has been extended till 2025. So any fund which is relocating from any other jurisdictions, they have that 2-year window where there is no capital gains tax if the funds, or I would say the assets, are getting migrated. The off-market transactions, if at all the migration has to happen, the SEBI has already come out with an enabling circular to that effect. So a lot of support from both the domestic regulators as well as from the industry or from the government is coming, and industry is realizing that it becomes a lot more easier to be at one place and to from where they can operate their operations. So that is what the feedback what I get when I ask any fund manager what is the motive when they want to do it, because we can come out with an enabling regulation, but it's the industry which would be taking a plunge. So as I see more number of such funds doing it, then yes, there are certain boxes which are taking, and I said it would be one of those things which I've already mentioned earlier, would be the criteria if they are thinking for a relocation. So I'll hand it over to you.
As we speak, how many funds are there in GIFT City as we speak?
So as on date, we have 72 fund managers which are registered with us, and close to 62 funds which have been already taken registration, and they are in various stage of closures, I would put it. Maybe someone would be at earlier stage, we just received our registration. They would be in that stage of closing their contribution agreement, and all the others would be close to their first close announcement and all those. And total commitment is close to around $17 billion. This is just happened in past 2 years. Bulk of the registration, we came out with our fund management regulation in April 2022, and in that now in 1 year you see that there has been phenomenal jump in terms of the kind of funds are coming over here, and also a good amount of LP participation. So that what we have seen, the likes of the biggest LPs and the biggest institutions are already today present in the funds which are operating out of your city. So that gives a lot of substance value to the regime as well as to the people who are operating from this side.
Great. So I think today we have a lot of questions, as we have in all webinar, we have questions. I have a list of questions with me. We'll be discussing after I give a brief presentation on setting up fund. So we will have some our friends from Mauritius as well. So we may have certain questions from them on relocation or any other issues if they have. So thank you, Meherji. So I'll proceed with, so Nupur, can I proceed with the presentation on setting up fund?
Yes, thank you so much, Mihiji, for giving us the valuable inputs and introducing the public with the introduction and the benefits what the GIFT City IFSC is doing. So now I request Sameerji to elaborate the public on the benefit on setting up the fund in GIFT City as per the IFSC regulations. I welcome Sameerji.
Thank you, Nupur. Thank you, Nupur. So friends, it's always a pleasure to be in such webinar with a topic, and the subject is very near to us, and we are trying to disseminate as much as information as possible to disseminate in India and outside India. So this is one of our webinar, and so I'll just take you around a very quick mode how to set up a fund in GIFT City, And for further details, we have question answer after this. And we can circulate the presentation in detail. We can talk offline if you have things. So the object is to brief you about the guideline, how the things are happening, what are the structure over there in GIFT IFSC. So I'll just share the PPT here and I'll try to finish as early as possible. Yes. So friends, we are talking about setting up fund in GIFT City IFSC. As Mirji just informed, IFSCA is the regulator in GIFT City and IFSC stands for International Financial Service Center. And A stands for authority, which is from where Mr. Mir is. So first of all, this is a legal structure of a scheme. It is synonymous to, instead of, for the ease of understanding of the audience, I would use the word fund instead of a scheme so that you can catch the thing fast. So what is the legal structure of the fund in IFSC? So it is a pretty standard globally. You do in non-IFSC, in SEBI, with SEBI fund also, it is the same. So when you say the scheme is a form of a trust. So there is a fund management entity, which is FME. That is the main thing which has to be set up within the regulations. So which you call an asset manager or investment manager with in other parts of the world and India. So fund management entity is there. So which enters into an agreement with the scheme or the fund which is formed in the by way of a trust. And in this scheme or trust, you would have foreign investors investing in, Indian investors investing in, and this trust or the scheme would invest in various securities as which is written there that can invest within IFSC globally anywhere. So it's quite pretty standard, very simple, easy to understand structure which is available in IFSC. So if you say talking about the regulation, the main and the master regulation is fund management entity regulation, which was out in 2022. Just to give you a broad, so this regulation mainly talks about setting up of fund management entities, which as you say, investment manager or asset manager, which you call. And second part is it talks about kind of funds which can be launched by these fund management entities. And third is others, like what other services, portfolio manager, investment trust, family investments. So it talks about this. So here the main thing to understand to our audience is the fund we have to set up, we have to select what kind of fund management entity we have to set up in GIFT City, and then what kind of fund we need to launch. It totally depends upon your strategy, what kind of investors you have, where are they, in what place of the world they are located, where you want to invest. So basis that you decide what kind of FME you have to go and what kind of fund you want to set up. So basically the regulations provide for three kind of FMEs, which is one is authorized FME, second is registered fund management entity, and third is registered fund management entity retail, and the previous one was non-retail. So these are in grade 2, like increasing their complexity and the amounts of their investment. Okay, so you see that the first is authorized FME, where the net worth requirement is $75,000. For second category, the net worth requirement is $500,000, and for the third category, the net worth requirement of this entity who can launch these funds is $1 million. And you have, so we'll talk more about separately on these in the coming slides. So these kind of three FME, one of them you can set up in IFSC. So now what is the difference? The difference between SEBI registered fund and the IFSC. So with SEBI, the control is on the fund. The trust, which is the compliance and everything is on the fund side. But in IFSC, the control, the regulation, the regulated is the fund management entity. So there's this basic difference between the funds which are running with SEBI and with the IFSC. So now you see there are three type of fund management entities which one can establish to setting for the setting up the funds. So one is authorized, registered non-retail, and registered retail. So just for the ease, we have put it in this fashion so that you can easily comparatively understand this. So what kind of type of schemes either each of these fund management entities can launch? So schemes, you can understand fund, the type of fund which they can manage. So one is venture capital scheme or a on a private placement basis. The other one can launch venture capital scheme and restricted schemes on a private placement basis. And third is all scheme offered to investors, including retail investors. So what would be the form of the entity? So FME, you can set up either a company or an LLP or a branch. The same with the second one. And in the third one, the registered retail, LLP is not allowed, only company or the branch is required. So if you have a company anywhere in the world, you can set up a branch just to start the business over there. And that branch can have the registration process with the IFSC, and it can be done easily. So as I said, minimum net worth for all these things is one for the first category, $75,000, second category, $500,000, and third category, it is 1 million. So now each of these FME, there is a grading of the investors, that what kind of investors through which they can raise the funds raise the fund in their various funds or the schemes which they launch. Like type of investors and permitted minimum investors. So accredited investors, there is no minimum limit. For others, in first category, you have minimum $2.5 lakh or $2,250,000 is required. And if they're the employees of the directors of the FME, then it is $60,000, it is less for them. Similarly, you see for each category, what kind of investors, what is the minimum investment is required, that is there. So minimum employees. So when you set up, you need a physical office in GIFT City to operate a fund or to set up a fund. So minimum employee requirement is there, that for a first category, you need one principal officer. For a category 2, which is non-retail registered FME, you require 2, one is principal, one is key management person. And in for retail 3, you need minimum 3. This is the minimum requirement when you set up over there. Similarly, it is the requirement for the directors, which you see, and launch of new scheme. So now you see, as an authorized FME, you can launch a fund very quickly. You can file the PPM, private placement memorandum, with the authority. And then I think at the moment, Meherji, if you tell green channel is not that you are taking some time to really allowing them to start the fund. So or is it green channel at the moment?
So the green channel is for the authorized one. They can still start what I would say in terms of getting the contribution agreement and all those things. But we would still evaluate the document. By that time, what happens that they can do the other process which is required. But if at all there is any comment which they might have to include that in the PPM or the private placement memorandum.
Okay.
The difference is when you can start marketing of the fund and when you cannot market the fund. On authorized FME and green channel, you can start marketing on the fund at the day when you file it. Whereas in registered non-retail, you will have to wait for the communication from our end. Yes, the fund is approved and you can start. Yes. So these are the two differences.
Yeah, thank you. Yes. So in when you are setting a fund, minimum experience of the people, it is relevant. But in third category, the kind of experience is required, it is provided there. Like experience of minimum 5 years in managing asset under management greater than or equal to 200 million with investors greater than or equal to 25,000. So these are the things which you have to see when you are setting up different kind of funds or different kind of investment management entities. So the target corpus. So when you are talking about authorized FME, they have to minimum commitment of they have to have 2.5% of the target corpus. FME has to put their skin in the game. They have to invest that much of amount. Similarly, if the target corpus is more than 30 million, then minimum and maximum limits, it is written here, which is self-explanatory, you can see. In case of registered FME, if it's a close as ended, then it is 2.5% of the target corpus. In case of open-ended, 5% of the target corpus. Similarly, you see that in each category, minimum contribution from the FME, fund management entity or investment manager, what you may call, is required. So that is provided over here in the regulations also, which we had put in the chart. But in case if you are launching an angel fund, then the FME contribution is at least is 2.5% or $20,000. So for angel fund, everywhere the thresholds are lower. Even if you go to SEBI, then there it's lower. Even in GIFT IFSC, it is lower. So what is the, so we are moving, so what is the tenure of the funds which are, so I think we skip this slide. Yes. So now I just gave you a small brief description on the type of fund management entities which you can establish to launch various funds. So now these entities which are established, what kind of funds are available in GIFT City? So these are the three categories, type of funds are available which these fund management entities can launch. So like one is venture capital scheme or venture capital funds, other is restricted scheme, non-retail, and third is retail scheme. Earlier set which we are looking, that was from the fund management entity perspective. So this section is from the fund perspective, the kind of fund are launched. So what is the legal structure of the fund? When everybody says I have a fund, so what is the legal structure of the fund? The fund would be either a company, LLP, or a trust. But in retail, it can be only company or trust. So normally, majority of the funds are established as a trust in the form of trust. So type of a scheme, what kind of type of fund it could be? The first category, venture capital, has to, VC fund has to be a close-ended. The other one can be close-ended and open-ended both. The thresholds are there. And similarly for retail scheme, it can be open-ended and close-ended. Minimum max limits are provided there. The corpus, what is the minimum corpus with which you can start the fund? In case of venture capital scheme, the minimum corpus is 5 million. And if you are setting up an angel fund, then minimum corpus is 1 million. And maximum corpus for a venture capital scheme is 200 million. So if you want to set up a fund which has more than with the corpus of more than 200 million, then you have to go to the next category. So minimum is 5 million for the next category, and maximum there is no limit. Now you have maximum number of investors. In venture capital fund or venture capital scheme, your maximum number of investors can be 50. You have to have 50 or less than 50. And in case of an angel fund, it is 200 or less than 200 per portfolio scheme. And in case of a second category, which is restricted, you have to have maximum limit is 1,000 investors per scheme, and retail, there is no limit. So similarly, if you see the maximum number of investors, we just say, so minimum number. So now it is in every, what is the minimum number of investors? So in third, it is 20 investors. You have to, in the retail, you have to have minimum 20 investors with no more investing more than 25%. So now minimum contribution from an investor, we just saw in the earlier slide. If it's an accredited investor, then there is no limit. But if it is other than accredited investors, so you have $250,000, and for angel fund 40K. So maybe if I ask at this point of time, has the regulations defined accredited investor, or still we are awaiting that definition?
So we are working on the circular, so
Yeah.
it should be coming out in some time.
Okay.
At least idea is to have it in months' time, the regulation or the circular to that effect.
Okay. So yeah, so I think that definition of accredited investors in GIFT IFSC would be, as Mirji is saying, it would come out in some time. So what would be the tenure of the funds? You can see over the what is the tenure. So everything, these things would decide your strategy, what kind of fund you want, when you exit, what you want to exit. So all these criteria you should know when you are launching the fund in GIFT City. So minimum is 3 years. You can extend up to 2 years with the consent of 2/3 of the investors. Similarly, for restricted scheme, you have a minimum close-ended, minimum 1 year. There are extensions. So these are the tenure of the funds which are provided over there. It is within the regulations. So investment in unlisted, mostly if you see funds are investing in an unlisted or a private of companies, So in venture capital scheme, there is no restriction. In restricted non-retail, so there is certain, and in the retail scheme, it is written, it's very self-explanatory that in open-ended, in case of restricted scheme non-retail, you have maximum 25% of the corpus you can invest in the unlisted. So it goes that way. Investment in associates of FME. So now where the FME or the fund manager entity is related to certain party, or whether investment can be made. So it is permissible in case of venture capital scheme, subject to 75% investors approving the same. And similarly, you can see things are provided there. So now one of the main thing is valuation. So whenever globally, if you see, whenever there are the funds, you need to value the fund, you need to do the valuation of your units, and you have to intimate to the investors. So in GIFT City, for first category of the funds, you have a yearly, you have to do the valuation and provide the information. And in case of second category, you have to do it half yearly. In case of close-ended, in case of open-ended, it's monthly. And similarly, if you see retail schemes, it is daily and weekly. So these are the things for the valuation part of it. So leverage, if you see, if the fund managers who are there and the operating in this system, they know that leverage is very much needed to maximize the benefits of the funds. So that is permissible, and how it is provided there. So custodian, when any fund is investing, so as a custodian is required to be appointed as a watchdog for the investors. So in case of first category, if the asset under management is above 70 million, then custodian is compulsory. Below that, you need not to appoint. You may appoint as a good practice, but it's not compulsory in first two categories, if you see. And in third category, it is required. So what are the investments, permissible investment by scheme? Any kind of funds which you launch in GIFT City, where all they are permitted to invest. So the first category, upper written, all kinds of funds which we have just talked, 1, 2, and third category, they can invest in all these areas, A to I, which are written there, securities issued by unlisted entity, subject to the regulations. So they are free to invest in all these things. So additional restriction, like additional restricted and retail schemes may invest in derivatives, including commodity derivatives, subject to disclosure in PPM. So this is not with authorized venture capital scheme or authorized FME, basically. Close-ended restricted scheme may invest up to 20% of the in physical assets. So these things are, so you can invest in the physical assets. So that is also permitted, subject to these thresholds. So friends, this was a brief, very quick snapshot on what are the fund management entities and what are their different categories and what are the requirements. And thereafter, I spoke about what kind of funds you can establish, what are their categories and what are their basic requirements. And this is a general snapshot just to tell you what is the process, how it runs through when you want to set up an IFS fund in IFSC. GIFT City. So when you are setting in a fund in GIFT City, there are two regulators, which regulator is one, which is IFSC. Other authority is GIFT SEZ. So when you set up an entity, so you have to have an approval from the SEZ and IFSCA. And when you have the approval from both, you can set up your fund management entity. And whenever the fund management entity is launching a fund, you file your PPM and get the approvals and proceed further. So it is the simply flow chart that you take a office space in the GIFT City and do all registration, approach both the thing, and you can, process is self-explanatory. You can set up. It's not a very uphill task, very easy process. All the authority and the regulator are very, I would say, accommodative and giving response very fast, and it's very easy to take the process through. So Meerji, I think at the moment, the people who are setting up fund, they have to, so I'll just take a question with this. Yes. So Meerji, at the moment, I think when we are setting a fund, we have to interact with the two authorities. One is IFSC and GIFT SEZ. So we were hearing that there is a plan to integrate both the authority to make it a single window. So how, to what extent that has reached?
So Samiji, the announcement came in the last budget, and after that we have started working on it. So what has happened is that there is constant consultation which is happening between IFSC ministry as well as the Ministry of Commerce, because SCZ falls under them. So I guess primary level, many things we have come a long way in that. There are certain amendments which would have to be done in both the acts, which would again require note from the Parliament. But we are hopeful that it should be happening sometime very soon. Maybe in this session or next session. I'm just hopeful about it. Cannot commit a timeline.
In near future, those who wish to set up the fund, they would be required to interact only with single window.
Only with IFSC. That is the direction in which we are going.
Yeah, so single window will be available, which will make it more faster and
Yes.
very easy for.
Yes.
So I think, Nupur, now we can take up the questions and we can invite our participants to switch on their camera, and if they have any questions, they can ask live. Otherwise, I also have so many questions.
I request the participants to put up their questions if they have. There are two questions in the chat. One is from Mr. Sahil Kumar. He's asking that $60,000 from FAP partner is on aggregate basis or individual basis?
It's on an individual basis. That is how we would come. It's an employee level. So that's a lower than the normal what any other investor would be putting in. Putting
So
his skin in the
I
game.
think there is one confusion. This $60,000 is not compulsorily for you to
Yeah.
invest.
Yes.
If
It's
you
optional.
want to participate, if the employee of the fund want to participate in the fund or invest in the fund, for them the threshold has been decreased, which is 60,000. Yes.
And another question is also from Mr. Sahil is, can the portfolio company of fund be called as the associate of FME?
I doubt whether that can happen. But somebody you would be in a more position from the corporate law side of it to answer this.
So when we are talking about associate, we are talking about associate with respect to the FME regulations which are there in IFSC.
Right.
In that context, it would not be an associate. Associate would mean where FME has a
Controlling.
partner. Yeah. So it's an employee. So it's a different. It is not an associate, I would say, as far as FME regulations are concerned. So I think we have, if a friend from Mauritius, if you have, you can log on, put on your camera, and if you want to ask something, you can ask. Then I'll start my questions, which I have received prior to this. Shailendra, if you want, you can. Okay, so in the meantime, whatever questions I have, so Neha is asking, when does the FME submits the net worth certificate? Can the FME make investment from the, what was it? Investment from the money marked for the purpose of net worth?
Yes, that is allowed in the regulation. So the net worth which you bring into the FME, and if that has to be used in the fund as their sponsor contribution, that particular thing is allowed.
So there is one more thing when we are talking about net worth. For example, there is an FME which is incorporated in India outside IFSC, GIFT City, and they are opening a branch. Then the paid up capital of that company would be or a LLP would be taken as net worth for that. So
what happens in terms of the branch structure, what we ask is the earmarking of capital at the parent itself. You need not bring that particular capital over here. Then in that case, you can earmark at the parent level itself. But in case of subsidiary, once we give an in-principle approval is when you have to bring in the net worth over here. You show us the proof that net worth is there, post which a certificate of registration has been given to the entity. So means, for example, there is an LLP who is registered in, let's say, Delhi, and if their contribution capital of that LLP, let us say it is more than $75,000,
And when they come there, then they have to bring in the $75,000 in IFSC, or with that capital they are okay to get the certificate.
So in case of this, if the main parent company is in Delhi, LLP, they can keep it in that, but it has to be earmarked so that we know that all times the capital is there.
Okay.
That is where it is. In branch form, you don't have to bring it into the bank account and GIFT IFS. It can stay there.
Okay. Okay. So if I will take my questions which I have received by email or by other messages, so that in the meantime, if somebody have, they will. So there have been a question on, as I said, on relocation. So when you say if somebody has to relocate from globally, so they are setting up a new entity, or how fast it is and how easy it is?
Somebody, it's over here from my IFSCA perspective or IFSC perspective, it becomes a new entity altogether. It's a new fund.
Okay.
But what happens is that it gets migrated. The old fund, which is there in maybe Mauritius, Singapore, it gets migrated into the units gets migrated to this particular fund. Or I would put it, the asset gets migrated to this particular fund. And this fund, then let's suppose it's a long only fund, then in that case, they would be this particular fund, which is there in GIFT IFSC, will procure a new FPI license. There is a process which is set by SEBI where it identifies that original FPI license number from this particular country was this, and now it is coming to GIFT, and this is a new FPI number, and this is a migratory fund. So that is done at the SEBI level by the custodian over there. But that is how it happens. So it becomes a new fund over here. For us, the timelines remain the same in terms of how we go about doing it. But you get the provision when you migrate it. So the certain tax provisions and all gets applicable to it, which gives you that neutrality in terms of no taxation at this point of time and all.
So I think somebody has asked a question on global in-house centers, because this is making a lot of, I would say news, and people are very much excited about it, because a lot of companies can set up their global in-house centers there and a lot of benefits are there. So though we will be doing a separate webinar on GIC, but I think if you want to take up a small answer on this, can you highlight what are the global GIC if they are relevant for the discussion? So you can just give one line on this. We'll have a separate detailed webinar, because we have a lot of questions on fund itself.
Sure. Though Global In-House Center is looked by a different division, so I'll try and try to do some justice. These are the entities which service their own offshore entities. So they would be performing their mid-office and back-office operations from GIFT IFSC. And once there is a separate regulatory regime which has been carved out. That is available on our website, so people can have a look at it. There are incentives in terms of taxation and also in terms of the state government incentives for setting up a global in-house center over here. I'll just give this to it. I'll pick my answer.
We will have a detailed webinar separately on GIC. And there is a question, what is the main difference between SEBI IF and rules and IFSCA? So I would take this. So like, if with SEBI, if you are registering the fund with SEBI, non-IFSCA land, then it is governed by AIF regulations, which is issued by SEBI. And if you are setting up a fund in GIFT IFSCA, it is governed and regulated by Fund Management Entity Regulation 2022. So both are different, and the operations are governed differently by different funds.
So I'll again chip in over here.
Please.
The idea is SEBI looks at the domestic side of it, whereas this is an international zone where IFSCA has an exclusive jurisdiction. Here, SEBI is not there. Similarly, IFSCA does not have a jurisdiction on the domestic side of it. So so I would put it that way, that if you are looking to, let's say, IFSC is a gateway for bringing capital from offshore to India and from India to outside. So if at all you have a fund which wants to invest in India and primarily it has a large investor base which is foreign, then IFSCA will make a lot of sense for them. And that is how predominantly many fund managers in the past has been going to other jurisdictions for collecting or pooling money from foreign investors in that zone. So that is how it is. So these are two separate jurisdictions and two separate regulators. And we don't interfere into each other's regulatory zone or on the domestic side or the international side of it.
Okay. So when a fund is set up in GIFT AIF, GIFT City, so these funds can easily invest in India and outside. Is there any process, or they can easily do it both the places?
There is absolutely no such process. Once the fund is approved over here, based on their strategy, they can take a call as to where to invest, be it India, be it out of India. So absolutely, they don't have to again come to us in terms of asking for that. Now the money is collected in IFSC and we want to invest in, let's say, in Singapore, a headquartered company in Singapore or something in Delaware, or we found out a startup in Indonesia or Sri Lanka or Bangladesh and we want to invest there. Absolutely, there is no requirement. It is based on the strategy. If that is mentioned in the offer document, you just go ahead with that.
So somebody is asking, can any note be provided on how setting a fund in GIFT will be beneficial for foreign investors? So definitely we have your contact details you have registered here. So there is we already have a pack for all these things. So we'll send you the this note on how it is beneficial for the foreign investors. And you can discuss more with our team also if required. So another question is PAN card required applicable for the fund in FME?
Yes, so for both FME as well as for a fund, you definitely require a PAN card. For your investors, you don't need it, which are the foreign investors which are there. There is an exception which is given by the government to that effect. But unless until you have a PAN card, how are you going to claim the exemption? So definitely you require the PAN card for both FME and the fund.
Okay. So I have few questions. I think we will cross 5-10 minutes. So please,
okay,
for the benefit of the audience, we will just take for a few minutes more. So when we are talking about corpus, when like we say 200 million cap is the maximum for authorized FME or a venture capital fund. So normally in PPF, if somebody writes my corpus is 150 million with green shoe option of 100 million. So where it will go?
Then definitely you are intending to have a corpus which is higher than 200, right? In that case, you will have to come and register non-retail. Because the idea is that you would be crossing that limit and you would be doing it. Unless until you have a fair idea of doing it, you may not. These are more of a borderline case, let me put it this way.
So that's what, because that why I'm asking this, because this is advisable to the people who draft their PPM, and when they are writing their corpus, if they do not want to go into registered FME non-retail, so they should put a corpus limit to less than 200 million. And if any point of time they wish, then they can amend it. And
yes, they can upgrade the license. That is always possible. It can be, license can be upgraded or it can be brought down based on the strategy, the way people want it. Of course, when you're coming down, there are certain things which we'll have to look at it, but the process will still remain seamless to that effect.
So somebody is asking, can a fund can be registered both with SEBI and IFSC?
No,
so probably
both are two separate vehicles, and I guess registration happens only at one place. So depending on the strategy, as I said, what kind of investor base you're targeting is where you would decide where to register the fund with which regulator.
So can India bound? I think mere question to ho nahi payenge logo ke hain, so we'll take the questions.
Sure.
So can India bound investment be made by multifamily office from India obtaining license in GIFT?
India bound investment, again, if a family, Indian family setting up an FIF over here and going back into India, that will not be possible. If they can only make an outbound investment from here.
So if the multifamily offices want to have global funds, or they want to invest globally, then GIFT City is the best place for them.
Yes, so that is the reason I distinguish that if it is an Indian family office money, which the money is originating from India and coming into GIFT, then it cannot go back into India. It has to necessarily go out of India.
So for family offices, GIFT is better because if you send under LRS, so you are limited over there. If you send through GIFT City, so new FDI regulations, you can send more money with, there are different thresholds for it. So with your permission, can I take one or two questions? Because we
Yes.
have already crossed 4. So I'll take one or
And
two.
sorry, I guess Neha's question is, can India-bound investment be made by multifamily office by obtaining
Yeah,
license
this
in
is the
India?
question which I took.
Yes, it can be very well done as you are investing in India. And I hope this multifamily offices are residing out of India, so it can very well be done.
So when we talk about any sponsor of any fund or trust, so is there any requirement of the location of the sponsor, or whether it is in India, foreign, anywhere can be the sponsor, or what?
Yes, there is no such requirement for the sponsor, definitely not that he needs to be present in GIFT. Trust, we have a regime in place. So if the trustees are based in GIFT, that is well and good, though our regulations today does not insist a trustee to be based in GIFT, but if at all, it gives a lot more weightage if the trustees are based in GIFT. But there's no such restriction for non-trustees or trustees which are based in the domestic zone to be a trustee of the fund. It's still okay.
So I think I will ask the last question for today, which has come to me, which is related to stamp duty. So many people are asking whatever agreements with agreement under funds or contribution agreement, all these agreements are there. Do we need to pay stamp duty on that?
I guess today there is something which is being worked out by the GIFT City side of it on the stamp duty, because that's a state government subject. So too early for me to say on that, but there is something which is being worked out to create something in writing in black and white for the exemption side of it.
Because to my understanding, there is maybe a little bit the stamp duty is not there within the GIFT City, because you have GST is not there. There is no other thing. So maybe if the documents which are executed within GIFT City.
No, there is some I would say gray area to it today. Samirji, I am not a tax expert in that matter. So if we get something which is black and white and not gray, which is being worked upon, this is what my information, the information I have. So it should be rolled out soon. The way we have done in aircraft leasing, where we have exclusively got a written confirmation that there is no stamp duty on that SPV and all. So I guess similar thing would come here.
So I think with the same synergy, some notification or clarification may come for this, because many, I mean, I would say within a last 1 week, 4 or 5 funds have asked me this question.
Right.
So I think we'll be able to give them answer in near future, correct answer. So I think with this, I would limit my questions for the next webinar, because the questions are endless to me. So, but anyway, it was really nice interaction. And I think some gentleman was asking for GIC. So we'll definitely come up with the next GIC webinar. Nupur, over to you. Yes, please.
Yeah, I thank you both the speakers, Mr. Mihir Upadhyay and Mr. Samir Rastogi, for enlightening the participants with the setting up of funds in GIFT City and give the awareness about what is GIFT City and what are benefits to the investors and to the people who want to set up the funds in GIFT City, and also providing the legal regulations which are there relating to setting up the funds. And I thank all the participants for giving us the time and listening to our honorable speakers for the current topic. And all the current presentation will be sent to all the participants who are registered for the webinar. I thank you everyone once again.
Thank you.
Have a great weekend.
Thank you, everyone. So I have one request with all the participants who are attending this webinar. Please disseminate this information about GIFT City, about the funding, to as much as you can to your connects within India and globally, so that we can benefit our country. Thank you very much. Thank you, Mirji, once again. Thank you. Thank you so much. Thank you.
Hello, everyone. In case if you have any questions, you can put it over the chat box. That will be very helpful for us so that we can revert you via your registered email IDs, which we have got it. Thank you, everyone.